When you picture the global technology market, um, it is so easy to imagine this pristine, infinite digital cloud. Like you tap a screen, a server farm somewhere blinks, and artificial intelligence just magically generates whatever you need.
Right, it feels entirely weightless. I mean, we are totally conditioned to think of technology as just software, as code floating in the ether.
Exactly.
We completely forget the massive, heavy physical reality underneath all of those invisible processes.
We really do. But then you look at what is happening right now in 2026, and you realize that weightless digital cloud is anchored to the ground by incredibly fragile physical threads. And, well, those threads are under unprecedented tension right now.
Yeah, they are snapping in some places.
So welcome to our deep dive into the massive hidden forces that are completely rewiring the global technology market. We are exploring the unprecedented 2026 semiconductor and electronic component crunch, and we are really glad you are joining us for this.
It is a critical time for this. The ground rules of the entire tech economy have fundamentally shifted this year, making it essential to look at the physical mechanics of the industry.
To figure out exactly what is going on, we are synthesizing a really massive stack of fresh 2026 sources for you. We are pulling from market reports by 360i Research and Trax Technologies, detailed price trend analyses from UTMEL, and ground-level corporate updates from major players.
Right, players like IQE, MACOM, and Global Wafers.
And our core mission today is to unpack exactly why prices for everything are skyrocketing. I mean, everything from the basic microcontrollers in your car to the most advanced AI chips.
We also need to look at how geopolitics is creating brand new supply chain choke points and the extreme, almost desperate strategies the industry is using to survive.
Okay, let's unpack this. To understand the current crisis, we really have to start at the foundation. The explosive demand for AI is basically sucking all the oxygen out of the standard chip market, right?
It absolutely is, and that demand is being compounded by some truly bizarre physical raw material shortages.
Right, so let's get into that AI vacuum first.
Well, a single technological leap can warp an entire global supply chain almost overnight. The expansion of AI data centers it is dictating the behavior of every single semiconductor manufacturer on the planet right now.
Because the hardware requirements are just completely different.
Exactly. If we look at the raw numbers, a single AI server requires 30 times the memory of a standard server.
Wait, 30 times the memory per server.
30 times, yes.
When you consider the sheer square footage of new data centers being built globally right now, the volume of silicon required is, it's difficult to even visualize.
It is staggering. So manufacturers are looking at that demand, and they are doing the logical math. They are prioritizing the high-margin AI chips.
Which means they have to physically change their factories.
Right. They are physically taking standard DRAM memory production lines, the lines that make the memory for standard laptops and phones, and converting them to produce high-bandwidth memory, or HBM. AI architecture absolutely requires HBM to function at speed.
Let's pause on that for a second. High bandwidth memory isn't just standard memory packed tighter, is it? Like, there is a fundamental architectural difference that makes it so difficult to produce.
Yeah, it is an entirely different structural approach. Think of a standard memory chip like a sprawling, single-story parking lot.
Okay.
To get a piece of data from one end of the chip to the processor takes time and energy because it has to travel a long physical distance across the board. HBM uses a packaging technique called through-silicon vias, or TSVs.
TSVs, right.
Instead of a flat parking lot, they build a skyscraper parking garage, and they punch high-speed elevators straight through the floors. The data travels vertically through these tiny microscopic vias, which is exponentially faster and uses significantly less power.
Punching microscopic elevator shafts through layers of highly fragile silicon sounds like an engineering nightmare.
Oh, it is. Because it is so complex, the yield rates, the percentage of usable, flawless chips you get out of a single wafer, are drastically lower than standard memory.
Because things just break during the process.
Exactly. According to the UTMEL report, you need to use 3 times the raw wafer area just to get the same gigabyte capacity as standard DDR5 memory.
Wow.
Simply because of how many chips fail the stacking process and have to be discarded. This inefficiency has created a massive global supply vacuum. HBM manufacturing capacity for all of 2026 is completely sold out. Giants like Micron, SK Hynix, and Samsung are outright refusing new orders.
So all that manufacturing space that used to go toward standard chips for consumer electronics, industrial machines, and cars, just gone.
Evaporated.
And the trickle-down effect on pricing for everything else is staggering, right?
We are seeing a profound price shockwave hit what the industry calls mature foundries. These are the fabrication plants that produce older, larger node chips.
Like the basic power regulators and sensors, the stuff that isn't glamorous but is totally essential.
Exactly. Because raw material costs and energy are spiking, these older foundries are incredibly expensive to run. Integrated device manufacturers are hiking their prices massively to compensate.
I saw that Texas Instruments raised prices by up to 85% on select parts in early 2026.
Yeah, and analog devices pushed 15% price hikes across all their standard lines. It is a universal trend.
Here's where it gets really interesting to me, though. It is not just about the fab capacity or the high-tech engineering of the chips. It is about the heavy industrial raw materials.
The physical constraints are very real.
Right, because the report from Global Wafers, who are the world's third largest silicon wafer supplier, paints a really stark picture of this. Their chairwoman, Doris Su, pointed out that their U.S. electricity prices are running 20% higher than they estimated.
Energy costs are a massive headwind right now.
And at the same time, copper prices are surging past $10,000 per metric ton.
Well, copper is the circulatory system of electronics. It is essential for the printed circuit board traces and the lead frames that connect the chips to the boards. You literally cannot build functional electronics without large quantities of highly conductive copper.
But then there was this one detail in the Global Wafers report that completely stopped me in my tracks. They're struggling to source the special oil used in the wafer slicing process.
Yes, the slicing oil.
And much of that specific oil is imported from Iran. I mean, wait, slicing oil from Iran? I always pictured chip manufacturing as this pristine, localized, high-tech, clean room process with people in bunny suits.
That is the image, the industry projects, sure.
Are we really saying the most advanced AI boards on the planet are fundamentally bottlenecked by traditional geopolitical oil dependence?
It highlights the ultimate irony of the digital age. The clean room is sterile, yes, but getting the raw silicon into that room requires heavy, dirty, physical industry.
Right.
Silicon is grown in these massive, heavy, cylindrical ingots called boules. Those boules have to be sliced into microscopically thin wafers before you can print circuits on them.
And that's where the oil comes in.
Yes. You slice them using specialized diamond wire saws, and those saws generate immense heat and friction. They require highly specific cutting fluids and oils to prevent the silicon crystal from shattering during the cut.
So if the supply chain for that specific fluid, which happens to involve Iranian oil, is disrupted by Middle Eastern geopolitical tensions, the diamond saws literally have to stop spinning.
They grind to a halt. The pristine clean room is entirely dependent on the chaotic physical world.
That is wild. And if pulling the raw materials out of the ground and slicing them is that politically complicated, the software and lasers used to actually draw the circuits onto that material are even more heavily guarded.
Oh, absolutely. The physical constraints naturally lead us into the regulatory environment of 2026.
Which means we need to look at the geopolitical choke points and the packaging bottleneck.
Yeah.
How exactly are governments using these manufacturing tools as leverage?
The Trex Technologies report highlights an incredible asymmetry in global trade right now. There is roughly $30 billion spent annually on critical choke point technologies.
What qualifies as a choke point technology?
We are talking about things like extreme ultraviolet or EUV lithography equipment. EUV involves firing high-power lasers at microscopic droplets of molten tin to create a specific wavelength of light.
Which sounds like science fiction.
It really does. And that light is then used to draw circuit lines on silicon that are only a few atoms wide.
So it's a $30 billion market for the tools themselves.
Yes, but that $30 billion choke point is now effectively controlling a $300 billion downstream AI chip market. Regulators know that if you control the EUV machines, you control the future of computing.
It's the ultimate bottleneck.
Exactly. Export controls are also heavily targeting electronic design automation, or EDA tools. EDA is the advanced software engineers use to design the actual logic and layout of the chips.
Because you can't just draw it out on paper?
Right. You cannot physically sit down and lay out 3 billion transistors by hand. You have to use this software to simulate the electrical pathways before you ever manufacture anything.
So by restricting access to EDA tools, governments can prevent specific nations from developing competitive chip designs, regardless of how much fabrication capacity or raw silicon they actually possess.
Precisely. It cuts them off before a single physical chip is ever made.
So to build advanced tech, you are restricted from accessing both the blueprint software and the physical printing press. It's like trying to bake a world-class cake, but the government has restricted your access to both the recipe book and the oven.
That is a great way to put it. And the track's report mentions that chiplets are becoming a massive geopolitical headache in this environment, too.
Right, chiplets. Tell us about those.
Well, chiplets are the industry's answer to the high failure rates of building massive AI chips. Instead of trying to build one giant, flawless silicon brain, you build smaller, specialized modules, the chiplets, and package them together closely on a common substrate so they act as a single unit.
Which is highly efficient for performance.
It is. But from a trade compliance perspective, it creates a labyrinth.
Because you are combining parts from all over the world, right? Advanced packaging isn't just dropping a chip in a protective plastic box. It sounds more like taking a 10,000-piece jigsaw puzzle where the pieces were manufactured in 5 different countries, and you have to wire them together on a microscopic glass board.
That is an incredibly accurate way to visualize it. One chiplet might be designed by a team in Europe, fabricated in a foundry in Taiwan, and packaged alongside another power regulation component from South Korea.
And each of those countries has its own rules.
Exactly. Every single component originates from a country with a distinct export control regime. Tracking the provenance of dozens of individual microscopic components to ensure you aren't violating international trade restrictions before you ship the final product it is incredibly burdensome for compliance teams.
And if the goal of these export controls is to protect strategic advantages, isn't it also forcing global companies to fragment their operations? Like maintaining totally separate, inefficient regional design teams just to comply with different local equipment constraints.
That is the broader consequence, yes. Fabrication equipment vendors are having to maintain entirely different product portfolios and upgrade schedules across different regions based purely on what export controls permit.
So companies are maintaining parallel, highly inefficient design operations.
Yes. They have to optimize their chips to work within the constraints of whatever potentially older equipment is legally allowed in a certain geographic region. It fundamentally destroys the economies of scale that the global semiconductor industry was built on.
Add the new tariff structures on top of that, and the cost just multiplies. The 360i research report details how in January 2025, Section 301 tariffs hit imported solar wafers with a 50% duty.
Right.
Then, a February 2025 executive order slapped an additional 10% levy on Chinese-origin solar-grade wafers, so you have an effective 60% duty. But this sweeps up far more than just the solar panel industry, doesn't it?
It does. Tariffs are often applied broadly based on chemical element classifications. The tariffs aimed at solar polysilicon and standard wafers have swept up the highly specialized compound materials used in advanced electronics simply because they fall under the same import codes.
Wow. So collateral damage.
Exactly. It nearly doubled the effective import cost overnight for materials like gallium arsenide wafers entering North American markets.
If you are listening to this and wondering why the delivery date on your new electric vehicle keeps getting pushed back, or why high-end hardware costs are surging, this is why. It's not a lack of tires or glass. It's because the manufacturer is navigating a maze of tariffs and export laws just to assemble the basic computing modules.
The physical and legal friction is at an all-time high.
So if you literally cannot buy the tools to design standard silicon chips, and you face massive tariffs and raw material shortages just to build them, you have to find a workaround. You have to look beyond standard silicon.
And that is exactly what the industry is doing by pivoting to specialized compound semiconductors.
Let's get into that pivot, because silicon has been the undisputed foundation of the industry for decades because it is cheap and abundant, right?
It has. But silicon has strict physical limits, especially when dealing with intense heat, light emission, and ultra-high frequencies. This is where compound semiconductors, specifically gallium arsenide or GAs, and indium phosphide or InP, are stepping in to fill the void.
What makes it so special?
According to 360i Research and Semiconductor Today, these materials offer 2 massive physical advantages over traditional silicon. They have higher electron mobility and a direct band gap.
Let me verify my understanding of that first one. If a material has higher electron mobility, does that basically mean the electrons are facing less physical resistance? Like driving a sports car on an empty, perfectly paved highway versus trying to drive it down a bumpy dirt road.
That is the perfect way to look at it. The electrons move through gallium arsenide with much less scattering. That translates directly to faster signal processing, which is absolutely critical for the high-frequency radio waves used in 5G and 6G telecommunications.
So silicon just can't keep up with that speed.
No, silicon simply cannot switch fast enough to handle those frequencies without generating massive amounts of heat and losing signal integrity.
Okay, and what about the direct band gap? Why does that matter for AI?
Well, silicon has an indirect band gap, meaning it is terrible at emitting light. When you push energy through silicon, it mostly just generates heat. But GAs and NNP have a direct band gap, allowing them to emit and absorb light incredibly efficiently.
Which opens up a whole new set of applications.
It makes them the foundational materials for optoelectronics. We are talking about lasers, the LiDAR systems required for autonomous vehicles, and crucially, silicon photonics.
Silicon photonics is becoming a huge deal in AI, right?
Exactly. Modern AI data centers are generating so much heat that they are transitioning to silicon photonics, using pulses of light over fiber optic cables rather than electrical signals over standard copper wire to transmit data between the servers. It is significantly faster, and it doesn't generate the crippling heat that copper does.
The market reaction to this shift is explosive. The reports note that Landmark Optoelectronics saw their net profits soar by over 650% in the first quarter of 2026.
A massive jump.
That is entirely driven by AI and silicon photonics demand. Plus, they just secured a 5-year supply deal for indium phosphide substrates. Meanwhile, the overall gallium arsenide market is expected to easily surpass $1 billion this year.
These compound materials have basically transitioned from being niche aerospace or military components to being the absolute backbone of next-generation global connectivity.
I have to wonder, though, if gallium arsenide and indium phosphide are so vastly superior for moving high-frequency signals and emitting light, why haven't they just replaced silicon entirely over the last decade?
That is a very common question.
Is it purely a scalability and cost issue, or is standard silicon still inherently better at doing certain logic tasks?
It comes down to a combination of raw physics, the difficulty of crystal growth, and pure computational density. Look, silicon is derived from silica sand. It is incredibly abundant. We have spent 50 years perfecting the technique to grow massive, flawless 12-inch silicon crystals.
Right.
Gallium, arsenic, and indium are much rarer elements. Growing them into a single, perfect crystal structure is extremely difficult and highly volatile. The resulting wafers are smaller, much more brittle, and more prone to microscopic defects.
Oh, you just can't stamp them out by the millions like standard silicon?
No, you cannot.
Right.
Furthermore, while J is vastly superior for moving signals and light, silicon remains incredibly efficient and dense for pure computational logic, the billions of tiny switches that make up the actual thinking part of the processor.
So they serve different purposes.
Right. The industry goal is not to replace silicon entirely. The goal is heterogeneous integration. You use standard silicon for the brain of the device to do the heavy thinking, and you use the specialized compound semiconductors for the eyes, ears, and nervous system to transmit the signals.
That makes total sense. You use the best material for the specific job. But because these specialized materials are so critical to the nervous system of the tech, their value has skyrocketed.
It really has.
You can't just log into a supplier portal and place a standard order anymore. The corporate maneuvering and supply chain survival tactics happening right now are intense. Companies are literally buying their way into the supply chain.
Yes, the landscape has aggressively shifted from a buyer's market to an extreme seller's market. Companies that rely on these components are reacting with vertical integration to protect themselves.
The most glaring example in the current sources is the recent deal between MACOM Technology Solutions and IQE. IQE is a fascinating company in this space. The reports refer to them as the largest Epiwafer supplier, possessing roughly 20% of the market share. What exactly is an Epiwafer?
An epiwafer, or epitaxial wafer, is created by taking a base substrate and growing a perfectly structured, microscopically thin crystal layer on top of it. It's the highly engineered, custom canvas that these specific optical and analog chips are built on.
And IQE dominates that step.
They do. They dominate this foundational step, but they were undergoing a strategic review earlier this year, which essentially meant they were putting themselves up for sale or looking to heavily restructure their assets.
MACOM, who is a major analog and optical chip supplier for AI data centers and defense programs, saw that opening and stepped in. They led an £81 million investment into IQE, putting in 45 million pounds directly from their own balance sheet.
A massive capital injection.
But this wasn't just a friendly venture capital injection. MACOM secured a long-term supply agreement for these critical compound semiconductors and grabbed a board seat in the process. This officially ended IQE's strategic review and took them off the market.
They leveraged their capital to pull the premier supplier off the open market, yes.
This MACOM and IQ beetle reminds me of the 19th century railroad barons. They didn't just buy steel. They bought the steel mills to guarantee nobody could stop them from finishing their tracks.
That is a perfect analogy. They are securing the foundational substrate. If you own the canvas, you control who gets to paint. And for the vast majority of companies that do not have the capital to just buy their suppliers outright, the daily reality of procurement is incredibly difficult right now.
Utmel actually put out a survival guide for procurement teams operating in 2026. The overriding, bolded message is that just-in-time manufacturing is dead.
Completely dead. Utmel is telling companies they must massively increase their buffer stocks. Lead times for some high-voltage components have stretched from a standard 12 weeks out to 40 weeks.
40 weeks is almost a year.
Right. Production lines for advanced vehicles or servers are halting because a single 10-cent component is stuck on a ship or held up in customs.
Utmel also heavily stresses utilizing strictly vetted distributors, right?
Yes, to avoid the wave of counterfeit parts that are currently flooding the spot market as desperate buyers try to find workarounds. The spot market is incredibly risky right now.
The most dramatic shift, however, seems to be the advice Utmel is giving directly to hardware engineering teams. They are advising companies to fundamentally redesign their circuit boards for multi-sourcing.
You can no longer rely on a single, perfectly optimized chip supplier for your core components.
Utmel suggests engineering boards with pin-to-pin compatible alternatives. So, if an NXP microcontroller is suddenly hit with a 40-week lead time, your board is physically designed so you can drop in a Renesas or a STMicroelectronics chip in its exact place.
That is the theory, yes.
But in highly optimized, multi-million-dollar AI hardware is seamlessly swapping out a critical integrated circuit, actually realistic, without causing major performance sacrifices.
This is the ultimate trade-off between peak performance and mere existence. In a perfect world, swapping a highly optimized chip for a secondary, alternative brand will inevitably introduce sacrifices.
So it's not a perfect one-to-one swap.
Seldom. The firmware might need to be heavily tweaked, the thermal profile of the board might run hotter, and power efficiency will likely drop.
But they have to do it anyway.
Yes. In the reality of the 2026 supply chain, a slightly less efficient product that actually rolls off the assembly line and ships to the customer is infinitely more valuable than a perfectly optimized product that exists only as a schematic because you can't source the primary chip.
Wow.
Engineers are being forced to compromise. They are designing for supply chain resilience over absolute peak performance.
Resilience over absolute peak performance. That is a massive paradigm shift from the last 20 years of tech development, where every generation just had to be faster and smaller no matter what.
It is a complete reversal of the old rules. If we synthesize all the sources we've explored today, from the pricing data at Utmel to the market growth in 360 research, to the aggressive corporate actions of MACOM and the physical realities detailed by Global Wafers, the overarching narrative is unmistakable.
Right.
The 2026 chip market is no longer just a predictable story about Moore's Law and engineering prowess.
It is now a highly volatile ecosystem.
Yeah.
It is dictated by the massive memory vacuum created by AI data center expansion.
Yeah.
And it is strictly constrained by geopolitical trade controls, heavy tariffs, and export limits on the foundational tools required to even design the chips.
And all of this is driving a frantic scramble for specialized compound materials like gallium arsenide to bypass silicon's physical limitations.
For you listening to this, this isn't just abstract corporate maneuvering happening in a boardroom. This impacts you directly.
Absolutely.
Whether you are buying a flagship smartphone, trying to invest in a new hardware startup, or looking at the EV market, these underlying costs and line-down risks are permanently altering consumer prices and product availability.
The era of cheap, invisible, infinite tech hardware is over. The hardware is hyper-visible, highly contested, and increasingly fragmented by regional borders.
Which leaves us with a final thought for you to mull over. We've spent this time talking about how human engineers are being forced to design suboptimal circuits and vertically integrate their supply chains just to bypass international trade laws and missing raw materials. If the physical infrastructure of AI, from Iranian slicing oil to specialized indium phosphide wafers, becomes so fragmented, highly taxed, and incredibly expensive to source, Are we approaching a future where only massive nation-states, rather than private corporations, can actually afford to build the next generation of computing?
Hmm.
Or, even wilder, how long until we just ask the AI to design its own supply chain?
If human geopolitics has made hardware manufacturing this convoluted, an AI designing the physical infrastructure for the next generation of itself might be the only way forward. That is a profound question about the future.
It really is. Thank you for joining us on this deep dive. Until next time.